Hey, folks, good morning. Grab your coffee. Make sure you share the link. We're going to start here in just a second. Good morning. Hey, Dr. Abdullah, all the way from Saudi Arabia, my favorite oil and gas cybersecurity inventor. I'm expecting some really good questions from you today. Let's get the elephant out of the way. That's Alex's new surfboard. Yes, I'm still in my daughter's room. I spent the weekend working with her, teaching her how to surf somewhat. I have the worst back rash. I got slammed. The waves. There's a tropical storm off of North Florida right now, so the slop, the waves aren't the greatest, and my back is absolutely burnt and torn up. But that said, it was the best weekend I've had in 3 months. I'll go ahead and say that. Very, very proud of her and her abilities. All right, folks, let's jump in and get started. Good morning, everybody. Welcome to the 32nd, oh my God, episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, 11FS Managing Director North America. I'm your host for the morning show. Do let us know where you're watching from. Really do. Give a shout out to wherever you are in the world. We've already got folks dialed in from Saudi Arabia, for example. Hey, Dr. Abdullah. We'd love to hear where our viewers are based. Please share this event on your LinkedIn channels to invite friends and colleagues. Hit the like button and subscribe to 11FS on LinkedIn so you never miss a show. Please do share this. It helps people find it. Before we jump in, just a few interesting news stories I saw over the weekend. The first, UBS expects global fintech revenues to increase by more than 3 times over the next decade. The bank believes its growth forecast to be rather conservative. I would agree. The global fintech industry will increase its sales from 150 billion in 2018 to more than 500 billion in 2030, according to the UBS report. We'll see how that actually plays out. Another one, SoftBank Group said today that Jack Ma, their co-founder of Alibaba Group, will step down from its board after serving as a director for 13 years. Ma's resignation will be effective on June 25th. To me, a pretty decent loss. I actually like Jack Ma quite a bit. And last but not least, the Wall Street Journal reports Japan's economy fell into recession by one common definition of the first quarter of 2020, with results being worse than expected in the current quarter. I would expect to see that headline repeated for most of the world. So that said, today we're happy to be joined by Sunil Chandra. He's the CEO of OakNorth. I brag about OakNorth constantly from stage, Sunil, by the way. So you are I always ask this question in the US. I'm like, who do you think the most successful fintech company in the UK is right now? One that's actually profitable. And I get all these blank stares and I'm like, exactly. Y'all do not pay attention. However, I'm sure for our international audience definitely knows about this. And in the US, man, we're going to intro you big time. On today's show, we're going to talk to Sunil about managing portfolio risk during unprecedented times and how OakNorth is helping lenders in the US support their customers. And Sunil, what floor are you on from your flat in London right now?
Well, the secret joke that Sam's referring to is we were talking about which corner of the house we're all hiding out in, and we have a floor in London. We have a house in London actually that has multiple floors, which we cursed when we moved into. But with 2 kids and my wife and I, having multiple floors is actually not a bad thing when it comes to social distancing in the times we live in. So, Sam, I am on the 3rd floor.
Okay, good for you. And by the way, I think we have our first viewer from Chile. So a shout out to Chile, everybody. And I believe that Jermaine in Chile would back me up on this. One of the best wine regions in the world is in Chile, and it's the Maule River, Maule. I'm going to go ahead and brag about that. You want to get some good wine, get it from the Maule part of Chile. I've never been there. I need to get down there. All right, Sunil, I have already kind of set the stage a little bit. I absolutely love OakNorth and what y'all do. So for those that aren't familiar, can you kind of tell us a little bit, one, about yourself and how you ended up at OakNorth?
Yeah, so hey, thank you Sam for having me on the show, and thank you for being the fan that you are of OakNorth. So OakNorth is, there's 2 parts to OakNorth. In the UK, we run a bank, a lending bank. We've got about 4 billion sterling, so it's give or take $5 billion on the books. And behind that bank, we built a raft of technology. Think of it as a credit decision engine or a credit analytics engine that we then license out to financial institutions everywhere else in the world. We've been around for a few years, as Sam said in the intro. We've been very, very fortunate to be profitable through pretty much a couple of months after we were founded. And, we believe in good old fashioned business, which is, really serving our customers, building great technology, having a great customer service. And with that comes, a very, very sustainable business. To the second part of your question, Sam, about how did I end up here? So we moved here from San Francisco in California a little while back. I got introduced to Joel and Rishi, the co-founders of OakNorth, probably about a year or so ago now. And the thing that struck me was they're second-time entrepreneurs. So their first business, they were incredibly successful and they sold it to Moody's. So this is their second business. The fact that they had got such good traction with the bank in the UK, the fact that the group was profitable, and the fact that with our platforms, our technology business, they found just such great market reception everywhere in the world. One of the things that I didn't know, but now I do know, is if you think about the middle market, so these are companies with EBITDA, $1 million and so above. They're usually high growth companies or growth companies. They're usually looking for debt finance somewhere in the 1 to 30 million. So they're not, the tens and 20,000s, nor are they the 40, 50 million type of debt requiring organizations. That middle market itself is roughly $7 trillion. I was at Google last, so if you think about the advertising business and all the Silicon Valley tech companies and others that are in the advertising core businesses, that's only a few trillion. So bizarrely, middle market is significantly larger than the last market that I came from. I think more foundationally, middle market companies, SMBs are really pillars of society. So you need a great middle market for society to function, for employment, for all the some of the things, and we could talk about some of them that you see deeply impacted with the COVID virus situation. So it's also a great opportunity for us to help through the technology we built and through the bank here in the UK to really, really help the kind of a core part of society.
And I want to actually note this and let you give a shout out. You went to University of, oh God, let me get this right, Wollongong. Did I say that right?
That's right. That's pretty close.
All right. How do you say it?
It's the University of Wollongong.
And that is in New South Wales?
That's in New South Wales. It's outside Sydney. It's about 80 kilometers, 50 miles, 40 miles outside Sydney.
So here's what I love about your background, Sunil. Apart from obviously what you're doing at OakNorth, you've got what I think is an excellent path to become a CEO of a successful challenger bank, I guess is what I'd say. So, a stint at PwC, stint at McKinsey, a good run at Barclays, I think like a dozen years at Google, if I'm not mistaken.
Yeah, a little bit more. Yep.
Yeah. So that's not bad. So if I had to line up, hey, here's a path, I'd go from New South Wales and Wollongong University to London, OakNorth. But I think one of the reasons I'm a big fanboy of OakNorth, and I'm not the only one. And I think it's summarized really well. We actually had a haiku or a poem submitted to us from Siddhar. Siddhar, our guy, he's on every one of these shows. So I'm going to read this. Sunil hasn't heard this or seen this yet. So you ready?
Ready.
I'm expecting this to be on a t-shirt for you guys. All right, Siddhar. And apologies to Lewis Carroll for this. You are young, OakNorth, yet have zero bad loans. And wonder of wonders, turn a profit. Pray tell in these days of money-losing unicorns, just how do you manage to do it? How's that? I mean, I think this has to be the first time someone's read you a haiku or a poem about OakNorth. So let's. I just threw that out, right? How would you respond to that? What's the secret sauce for OakNorth?
Well, I start with where you kind of started, Sam, and said, "Oh, thank you for the haiku." That is actually the world's first haiku I've ever had on LinkedIn online across any company. So
you're welcome.
So there you go. Well done. Look, our secret sauce is really you build great teams, you have a great product, you really, really do well with customers, and you run a disciplined business. You run a business that is thoughtful and disciplined about where we invest. It's thoughtful about balancing, which is really hard, to be fair.
Yeah.
Balancing growth versus investments. And, we take a very long view. We're building a generational company. So we balance our investments, we balance our growth with all the other prerogatives of a startup. And I will say, look, I go back to the founders. We're incredibly fortunate to have great founders. We're incredibly fortunate to have great teams all around the world. So we've got about 850 folks in the team now in the company, and then those are all good ingredients for success.
So that's one of the things I think I use as an example around OakNorth, this whole concept of managing your portfolio risk, right? Especially around loan books. In the US right now, and I'm sure it's global, but in the US,
sure,
the online lenders are just getting hammered, right? I mean, there's article after article about that, American Banker and Wall Street Journal, and what's happened there. So what is some of the stuff that you guys do that's a little bit different in managing your portfolio risk and your approach to lending?
And this really does get into what is the secret sauce behind the platform that we make available to other financial institutions. Because the way we think about OakNorth Bank is obviously it's regulated institutions, done incredibly well, incredibly high growth. It's really a proof point for us to prove that the technology that we built and the approach that we take works. So when we talk to some of our financial institution clients, when they say, well, how do we know that this technology is going to work? We point them at the team at the OakNorth Bank and say, here's a proof point, as you said in the haiku, no losses and no credit losses to date, and the growing loan book, the net interest margins, etc. That really strong proof points.
And let me interrupt you there, because that's my favorite stat from on stage, right? I say that in front of, I've done that in front of an audience of 5,000, and the looks I get of, there's no freaking way, right? It's the response. I always get that's impossible. And I'm like, I am just telling you. I'm flat out telling you. I don't. You're allowed to raise the roof, do whatever you want on that. That's a massive thing to brag about. It really is.
It is. I mean, again, it goes back to the quality of everyone on the team and all the hard work they do, and the underpinnings of the platform. So let me get to that answer of what is the secret sauce, since you've asked it twice now in different ways. Our view of how you think about first underwriting a loan, and then second, keeping an eye on it, monitoring it, is the way to think about monitoring a loan in this space is not to just look at backward-looking information. So if you think about how most loans are granted, they're really focused on what have you done in the past, what assets do you have on your book, rather than what are the opportunities for the business, what's your future cash flow, and how do you structure a loan that actually works well with the borrowers and what they're trying to do. And then you look at a bunch of macroeconomic data. So, you can have the best idea for a company, the growth company, but what else is going on in the macroeconomic sector that may impact the company? And you triangulate the two pieces to come up with a forward-looking view of what's the right way to structure a loan. That's what's built into our platform. You layer it, and we are unique in this and our ability to do this with this kind of customer centricity or customer delight value we have, which is we actually ask our borrowers to come in and talk through their business plan themselves face-to-face with our credit committee, because there's a lot of nuance and a lot of detail that gets lost in spreadsheets and everything else. And it's also just great for the entrepreneurs and the borrowers to be able to come in and actually represent their case. So that's what we think about when underwriting. At the start, we take a perspective which is very forward-looking, so forward-looking information from the borrower, and then forward-looking macroeconomic information. And we look at roughly 300 different data sources around the world to be able to triangulate the creditworthiness, if you wanted a loan, and how to structure that loan. The second piece of the unique source is kind of how we think about monitoring a loan once it's done. So as we've all learned, unfortunately, in the last couple of weeks, the world can change in a matter of days. Mm-hmm. And one of our theses in monitoring a loan is very similar to how we underwrite it, which is to really look at how the borrower and the loan are doing day to day, and then triangulate it again with third-party information. So we've had real situations where, a borrower may find themselves in a bit of trouble over a period of time. And we're often able to spot that either from the information they give us or from third-party data that we see again about macro trends. And we'll work with the borrower to say, what do you need? Do you need, forbearance, forgiveness? Do we need to restructure this differently? Do you need to find a different type of product before it actually defaults? And that's unique in the financial services industry. A lot of commercial lending in the financial services industry, unfortunately, and this is not a knock on anyone, is really around backward-looking indicators when you're underwriting the loan. And then you kind of leave it there until you come up to an annual review or it defaults. And that's a little bit too late. It's often very, very late. And some of it, look, we've been very lucky as a society. We've had 10, 12 years of a really benign credit environment. But we took the view very, very early on, which is, let's be super thoughtful, super intelligent about how we underwrite, and then use exactly all of those same key drivers when it comes to monitoring the loan.
I'm going to do a sports analogy for everyone. And I'm going to stick with my favorite sport, which is Premier League football. And here's my Arsenal shout out for everybody. I agree with you. There seems to be this approach when it comes to lending of you do everything up front, but it'd be like playing a game where you do no strategic. You have a game plan of how you can approach a football match, a soccer match, U.S. people. You'll have a game plan, but you have to adjust every game. The way you do your lineup, the way you do everything at halftime, throughout the game, the subs that who you actually sub in, because you're limited on the number of subs. So it's a continuous engagement throughout the game. You don't do your start. You don't get put together a starting lineup, play for 90 minutes, and then reflect. That's a waste of time. It has to be, it's an engagement throughout the entire life cycle, right? And I think that's one thing y'all do so well.
Yeah, I think that's an excellent parallel. And the world moves faster and faster and faster. So if you look at how fast markets have moved over the last weeks, to the downside, to the upside, to the sideways, despite all this investment we're made, and we keep refining our models, and we keep getting deeper in different sectors and domains. One of the things we've actually released recently, and we started again with the bank as a proof point, and now we're making it available to everyone, is with all of the sophistication, another lens, which is in the COVID world, how does the portfolio perform? Mm-hmm. And how do industries perform? Because you could have had the best borrowers going into COVID and the best business plans going into COVID, but the macroeconomic environment has changed. If you're running a pub or a restaurant, it's not your fault that things have changed around you. And so what we built was, on top of our sectoral model, we built what we call the CVR analysis, the COVID risk analysis, which is about 130 different domains to understand which businesses and which loans are most at risk. And the way we think about it is, what are the drivers for a particular sector? You talked about one of your viewers from Saudi Arabia. So what are the drivers in the oil and natural gas sector if you're exposed to that sector? And if you remained in shutdown for multiple months, how would you emerge from that crisis? Or if it was a few weeks, how would you emerge from that crisis? And what we provide to financial institutions is kind of a rating index to say, look, amongst your thousands of loans, here's a couple that, may not do as well as they thought, but they'll be perfectly fine. Here are some others where you may want to really think about some of the relief programs, and we've seen this across different countries around the world. Maybe useful to kind of get them signed up and get them moving on that. And here are some others where you're going to want to have a real close look and a deep dive with the borrower to understand how to get them through the entire shutdown. So that's we announced in the US. Sam, since you're out in the US, we'll start with the US. Customers and Modern Bank were the two public ones that we've announced, but we're obviously multiple other conversations as well in the American market, in the Americas. It's with a lens of how do we apply data and this structured approach to frameworks, domains, subsectors, to come out with conviction and kind of insights onto how a portfolio is going to do. So that was a very long-winded way of answering the question of what is the secret sauce. But that's, if I had to summarize that, that's really what it is. It's data and insights in a tech platform.
And I think it's a smart approach to understanding each market has their own unique DNA, if you will. And that's actually one of the questions that just came in from Derek Sutton at Autobooks out of Detroit, my hometown. What does inbound interest look like right now in the U.S.? What type, size of banks are inquiring and reaching out to you?
So the US is our single largest market around the world. We've very quickly gone from, as a portfolio, as a group, UK bank obviously exceptionally strong in the UK, to finding incredible interest, whether it's out in Taiwan, in Malaysia, in Australia, continental Europe, but all said and done, the US is our single largest market, both in terms of inbound interest as well as just clients that we have that we're working with today. We've seen all ranges of banks. So we're in conversations with some of the very large money center banks, the kind of the middle tier, the next tier of banks, 10 to 50 billion in assets, is obviously a very large part of the American financial landscape, financial institutions landscape, and some of the smaller folks as well. So even with our announcement with customers and Modern, you've seen both. That they have very different asset sizes. Modern is a bit smaller. Customers is much larger. We hopefully hear this first with you, Sam. Hopefully, we're about to make an announcement later this week with a significantly larger bank around some work we're doing with them in the US. But we've seen interest across the board from what I would characterize as some of the most progressive banks in America when it comes to using technology.
So I've mentioned early on when we started the show that we've got folks dialing from all over the world. So Zurich, Pakistan, Saudi Arabia, London, you take your pick. Chile, again, one of my favorite. And actually, a question out of Chile, because the LATAM market, right? So Central America, all the way down into Argentina, is just a massively growing fintech space.
Yeah.
So, do you have any plans about OakNorth providing a platform down into LATAM financial institutions?
Not for now, is the honest answer. So what we've decided to do is kind of think about the world in terms of language capabilities, data availability, and where we have clients. And you said this up front, Sam. It takes a while for us to develop deep sectoral expertise that's specific to a geography. The other view we have is let's work with a couple of clients and really deliver great impact. And then since we're building a generational company, there is plenty of time. We've had interest from LATAM, to be fair, and it's very, very tempting given all the characteristics you described. But for now, we're staying with areas we know we can go deeper in and deliver value. And then over the next years, ultimately, we do see ourselves as knowing mid-market companies everywhere in the world, and LATAM will be part of that.
And I love that comment. We're building a generational company. That's something we talk a lot about at 11FS. We've had a lot of interest from companies in LATAM for our services. And again, we've kind of made that same decision, right? How you control growth and how you grow is incredibly important. And we have no desire to go into a market where we don't have the expertise or know it as well as we do some others. And so we're cautious about our growth. It is an area we will move into. I love LATAM. In the US, I live about as close as you can. I'm in Florida. This is about as close as you can get to that market. So, there you go. Some other good questions that come in. Sure. Do you leverage alternative data when you make your loan decisions for your customers?
We do. So every sector has different attributes. So we do look at a whole raft of alternative data providers. Credit card information, for example, is one of the most common alternative data sources. We have, as I think I said up front, about 320 different sources. What we're really looking for is what insight do we glean specifically within the credit domain. So we really look at, if you're looking at a construction project for a shopping mall, what data sets provide us a forward-looking insight into what the tenant mix ought to be for a loan to be creditworthy for a development. And you can imagine what kinds of information we look at to do that. I'll say this up front, the biggest part of a data business is privacy and security of the data. Yeah. So, we never use either bank data sets or borrower data sets across multiple banks, nor do we use alternative data in any way that is counter to that philosophy. But yeah, there's it also governs why we've chosen the markets we've chosen, because there are rich data sets available that are incredibly predictive in terms of credit performance.
So you've had a ton of success in the UK, for example, and now in the US. David Cunningham asked a great question. Will you go farther in building out your customer-facing offering in other countries in Europe, such as Ireland? I love that he just was very specific on that one.
We don't have any clients in Ireland yet, but as I said, generational company, and Ireland's not too far away from London at all.
So there you go, David. Amanda Moore. I love Amanda Moore. She asks great questions. She's an MBA student right now. She's on, just like Sid Rahar, about every show. What are some of the debates that your team had when determining the CDR, so that COVID risk model that you put together?
Yep.
You already said you had like 130 data points that you looked at, but I'm sure you had a lot of debate internally about that.
Yeah, it's the CVR matrix, the COVID vulnerability and risk. The biggest things we have is causation and correlation.
Yeah.
So what things are interesting in the data sets you see, and they may have some correlation, which things are actually causal. So there's an effect as a result of it. The other thing is you can't afford to boil your ocean when you're talking about, things that move on a day-to-day basis, loans that move on a day-to-day, markets that move on a day-to-day. So one of the big discussions we continue to have is how do you make the model lightweight enough that it's not a heavy lift in terms of data required from a financial institution, yet useful enough to be able to go deep. And there's no simplistic answer to it. Unfortunately, in some sectors, you require more data, in some less. One of the clients that I mentioned that we might be able to announce shortly, that was one of the conversations we actually built with them was, what kind of data access do you have today in your core systems? How easy is it to extract and get to it securely? And then for the different sectors, do we get the same level of coverage, or do we get different coverage in terms of our ability to say, yes, this particular loan or this part of the book is at risk? And, in our first pass, we came, within a couple of basis points of their own risk models based off a limited set of data. That to us says, okay, we're kind of at that sweet spot where we've got as little data with as maximum utility as we possibly could get. And then, look, everything we've known to be true in the past is no longer true. So a lot of the models that we have all built over the years that, decades of credit analysis have known to be true are somewhat upended. So as we go through sector by sector by sector, we have a network of experts that we rely on to say, okay, are these variables and these inputs still truly valid? My favorite one, just for the sake of it, was I remember the day oil futures went negative for the first time ever in the history of oil futures. And we have a model that, again, talks about oil and natural gas. We had to reflect on, okay, does that fundamentally change upstream and downstream companies in this area, or is it a one-time event that really has no material outcome on credit worthiness? So for those that like a detailed understanding of every sector on the planet with lots of data sets and lots of different ways of thinking about causation correlation, this is a great space to be in.
So I think what we'll have our producer do is go out and just copy all the comments that have been happening on LinkedIn Live. It has been an OakNorth Love Fest. I'll just go ahead and say that. Global OakNorth Love Fest. I think we hit every continent, both in the northern and southern hemisphere, and everyone's saying, when are you coming? When are you coming to my market? Believe it or not, folks, we ran out of time. This stuff really goes by fast. Sunil, man, thank you for joining. What's the best place? What's the best place for folks, one, to reach out to you and find out more about OakNorth?
Sure. Look us up on our website. Look me up on LinkedIn. I would be delighted to hear from folks. And Sam, thank you again to you and the 11FS team. It's a privilege to be on board.
Yeah, we've been fans from day one. All right, everybody. Thank you for joining. Thank you for letting us know where you're at. I really do appreciate the global audience on this. Madrid, Zurich, didn't get to give you guys a shout out. Man, I miss traveling. I'm going to be blunt. If I could get on a plane tomorrow safely, I would. Tomorrow, I'll be joined by Ted Brown from Digital Onboarding, Inc. Again, if you know someone who'd be perfect to come on the show, don't hesitate to reach out to me. Or best place to ping me is probably on Twitter, Sam Maule, easiest place. Or you can actually email us now at breakfastshow@11fs.com. Everybody have a great day. Thanks for joining, Sunil. Thanks for taking the time.
Thank you very much, guys.